Hello. In this video, I'm going to talk about the realized profit of equilibrium. That actually is more complicated than it seems because when you log into your exchange, all your exchange shows you is your unrealized losses. Realized profit is what makes grid trading so popular and so powerful. It's different than unrealized profits because you have completed the transaction and sold the asset, at least in portion. I'm going to demonstrate this principle with a very simple view of equilibrium. Now, I picked a coin at random, and as you can see, this coin has some pretty interesting movements to it. The blue line is the point at which it made a purchase or a sell. The red line shows the next purchase. The green line shows the next sell. Now I'm using a boundary range of 0.3% because I'm looking specifically for volatility. So as you can see, every time the blue line raises to the next level, it's made a sell. It's made a realized profit of 0.3%. That profit's never going away. It's in your account, it's there, it's yours. You can't necessarily see it because your unrealized losses are overshadowing it. And the unrealized loss really is the difference between the price you originally purchased at versus the current price. For example, let's back up a little. If you purchased up here, your price would be roughly $1.3. Now, if you sold down here, you would have lost roughly 20 cents. But if you don't sell, that loss isn't actually going to happen. It's unrealized. So while you have this downtrend as an unrealized loss, every time you get a sell, you get a realized profit. So in this case, we have 3 realized profits, even though we have all of this downtrend. And as we continue to see the market unfold, we have more realized profits as the price begins to recover. But when it dips down again, you add to your realized losses. Then when it goes back up, you add to your realized you add to your unrealized losses. And then when you sell, you add to your realized profits. A little tongue-tied there. But that is the point of the grid. Grid trading, and equilibrium in particular, helps you realize your profits and locks them in small increments. By doing this over time, you can accumulate and build on that profit level, such that when your profits, that is your realized profits, equal your unrealized losses, you are technically at a break-even, no matter where you're at with respect to the original purchase price. And I'm going to demonstrate this in a few minutes with some coins on my VPS. So just remember that as long as you don't sell the asset, those losses aren't real. But when equilibrium makes a sell, one at a time, those profits are real, and they are added to your account. Okay, now I'm in my VPS watching all of the coins I am trading. Exchange, account, the coin, my realized profits. The amount of the realized profit of the last sale. This is only 4 days old, and I have realized $19.57 trading only at 0.3%. Now I'm using 20 lots on this, but as you can see, my realized profit for every single sell is 12 cents for this particular coin. Here's one where I have a realized profit of $2.77. And as you can see, the profits are minuscule. But where Equilibrium is making 200 to 300 trades a day, this adds up quite drastically. Now with this particular coin, Serve, it has an insane volatility right now. And I'm currently around $230 worth in my holdings. So when my profit equals my holdings, I will have break even. That is, my realized profits will cancel out my unrealized losses if I were to sell. But that is part of Equilibrium's latest addition, the exit profit. So on this coin, my exit profit is just $10. But as you can see, it hasn't exited yet. And it won't until it sells off all of the asset. So my minimum is $10, and that triggers the stage of the system knowing it needs to move into a sell-off state. Meaning once it's sold off, it exits. And I made 13 cents on the last trade, and my current accumulated profits are $19.59. Not bad. Uni has $1.67, XMR $1.19. Now, most of these coins and this data is roughly 4 days old. So this tells you by the end of the day, I will have close to $20. So I'm making roughly $5 a day pure profit on this one single coin. So figure after 30 days, $150. After 60 days, I will be above my actual holdings. And I will have a full realized and unrealized profit, because my realized profit will drastically be above my unrealized losses. So if I wanted to, at the end of 60 days, I could sell this coin off and have money directly into my account. But because this is a perpetual system, I don't have to worry about the pricing. This money is not going to go away. It's in my account now. So as I continue to buy and sell on that grid, I'm going to continue making these minor profits. And these profits are simply going to accumulate continuously over time. This is why I said in my last video, when you're working with Equilibrium and really any grid-based system, you need to look at the potential of holding your coin for at least 1 to 2 years. It's very possible with these kind of profits, it might take 2 years for it to scalp small fractions off the market. But over that time, it's hedging against the market no matter what direction it's moving. Up or down, it's going to make small accumulations. And those small accumulations will add up over time. This is why this kind of system is perfect for beginners, because it's minimum risk, and most of these are only trading 2 lots, so very small amounts. And this one's sold off already, which is why I have a 0. It's waiting for the grid to start over again. So as you can see, simple and elegant. The point and purpose of this whole process is simplicity in its realized profits. And that is the #1 biggest mistake I see when people first begin trading. They look at their exchanges, and their exchange says they lost 50% value of an asset. But they don't tell you how much realized profit that asset has brought you. In my case, I am roughly $180 underwater with Serve, but I've made $19, almost $20 of real money. So I'm really actually only $170 underwater. And as I continue to let this work, that value becomes less and less. That is where the statistitorium comes in, because it will show you your unrealized losses and your realized profits. So let's take a look at the transactions and now the coin holdings. So here, my actual transactions of XRP. As you can see, at one point, I was about $12 underwater. Now I am about $16 to $17 to $17 above water. Realized profit accomplished this. My realized profit on the basis of my accumulation. Now I still hold about 150 XRP, but if I was to sell everything out right now and close it, I have actual realized profit. And that would be this amount. Roughly $17 of actual realized value with my current XRP holdings. That money is in the account waiting for me to use it, or let the system run until it's met my criteria and continue to accumulate. And as you can see in my transactions, here is what I'm actually holding. So I'm at about 145 XRP right now, still left to go. So as I continue to progress to work this down, my realized profits are only going to continue to increase. It's that way with any coin I trade on Equilibrium. For example, let's look at my biggest coin right now. I'm doing roughly 20 lots per position, and as you can see, I've accumulated quite a bit of it. And I have quite a bit in the hole. $260 at the moment underwater. So I have $20 in realized accumulated profit, and I'm $250 underwater total. So I have a realized situation of $10 off of that, or $20. So $230. So if I was to sell right now, I would lose about $230. But if I let this run and I let it continue, I will work down this over time into a realized profit. And that realized profit will be just like XRP. I will get to the point that I will have more profit than what I am actually holding of the coin. And at that point, I can literally sell everything for a complete and total profit. Which right now, for this coin, $5 a day to 50, let's see, that's 150 a month. So in less than 2 months, I will have a realized profit to clear this out if I choose, no matter how much I am holding, unless it goes below this more. So understand grid trading. Grid trading is about unrealized losses and realized profits. For example, here is another one that has been a royal pain in the keister. When I first started trading this coin, it was at $13.44 per single position, or per price per position. I lost roughly 50% value, and it was trading at $6 not that long ago. As you can see, I'd accumulated quite a bit of it, and I have since been selling it off, little by little. But I still have quite a bit left to sell off. This coin has been taking quite a while, as you can see. Not one of my favorites, but nonetheless profitable with equilibrium. Profitable on a long-term situation. And once it reaches my realized threshold, then the next step will be for it just to sell this off. And once that happens, then I will be done with this coin with real money in my account for profits. As you can see, up, down, it doesn't matter. I'm slowly accumulating profit all the way. That's the important part. I am slowly accumulating profit. It may seem like pennies, but those pennies keep the account moving. They're hedging against future losses that I may have to realize at some point. But because of this approach, I can simply wait and let this do the work for me. So, constantly looking, buying, selling, and every sell is a realized percentage of this price. This is a big problem for grid trading in the very beginning, is a lot of exchanges don't go out of their way to help you see that you are in fact really making money. It's not a fast process, but it is a consistent and reliable process. And that is how you really make money on the market. You need to take your time and let simple systems like this slowly work. And through that consistency, you will receive accurate results. For example, here is another coin. Through consistent, reliable trading, as you can see, it is slowly hedging up on its profits. Every little peak is slightly higher than the last time. So over time, it is slowly increasing its profits. Now when it makes purchases, it goes down below and it accumulates, but then it realizes the profit. And it keeps repeating that process back and forth as the profits slowly rise. Let's see. This is a good example. Let's look at my USD balance. As you can see, it's all over the place. Here's my high point. Here's my low point, where I did some accumulations and got very close to the edge. But because this is a spot account, I don't have to worry about liquidations. But still, these kind of risks do have their own drawbacks. And it's not hard to figure out by looking at these charts which coins are actually my largest assets and which coins have the largest accumulations. For example, you can see here I had quite a bit, and here I had quite a bit. And that is reflected in my actual trading, where I went $90 underwater on this one asset, just to have one sell come back up with a very generous payoff. You can tell the difference between automated trading and manual trading. But still, slow, steady profits over time and consistently. And as you can see, watch the peaks, and you'll see the peaks over time slowly rise. So hopefully this will help explain some of the significant and valuable key factors of grid trading. It is profitable, even if you may not see it right away. It is very profitable. But it takes time to see and to realize just how that process works. Here you can see I come down through accumulations, hit my realized profits, unrealized losses, realized profits. As it continues to work, the realized profits overtake the unrealized losses, and you see significant bumps in the market appropriately. But whenever the markets begin to accumulate again, then you have unrealized losses. And over time, this coin will continue to gain realized profits, and you will see more patterns like this in its history as it climbs. Grid trading isn't the perfect tool for every situation. It's not the one-hit wonder that everybody makes it out to be. But it is a reliable tool in the tool chest that can be used to help you hedge against a volatile and uncertain market. Don't rely just on one tool, but don't overlook the power of that tool just because you can't see the profits directly. They are there, and they are working. It's just a matter of understanding where to look. This is a newcomer that I put up yesterday, and as you can see, it's already showing signs of doing quite well. Look for those diamonds in the mud, because they can really be something else. Some coins just have an interesting possibility to them. And that possibility can often be surprising. Look at volatility, or lack thereof. This coin actually has a very small volatility factor, but yet it has very interesting characteristics. And for equilibrium standpoint, that's going to prove to be a long-term valuable asset. That's going to bring in a lot of realized profits. So even when you see the market going down, understand that when it hits the sideways channels and it starts climbing and dipping and climbing, you're going to start seeing realized results. I'm going to wrap this up by talking about the last coin, and this goes into the modifications for the list markets program. I've extended the program such that you have the 1 day, 3 day, 7 day, and 31 day volatility. As you can see from looking at the chart, this coin doesn't look overly impressive by its volatility, but because of its patterns tend to be channel locked, it really is the perfect coin. So using the tools that Jackrabbit provides, you can look for these unique little diamonds that begin to really shine over time. And the price is really quite nice. Only 13 cents a position, so you don't need a lot of budget to get into this coin. So let's see how well things look now and see if we've hit the $20 mark. Almost. We're getting there. Slow and sure. Always, always, always pay attention to the realized profits. Don't focus on the unrealized losses. That's only a gimmick that will cause you real losses. Until next time.